TCS reports in-line set of numbers for the first quarter. PAT falls 2.7% to 13,349 crore, while revenue rises a little over 2% to 72,275 crore. EBIT margin narrows to 23.98 versus 25.3%. Total contract value for the quarter stands at $9.5 billion for the quarter. Going forward, the management says it is optimistic on demand resuming from Q2 FY27 onwards. As E20 fuel becomes the center of national debate, Petroleum Minister Hardeep Singh Puri defends the controversial move in an exclusive conversation with Times Network. Puri says E20 fuel outrage is meant to cause controversy and ethanol is not vulnerable to vagaries of the global uncertainty. The United States and Iran exchange fresh military strikes despite mediators urging both sides to adhere to peace memorandum. The U.S. military says it carried out airstrikes on around 90 targets across Iran, while Tehran responded with missile and drone attacks targeting Bahrain, Kuwait and Qatar. Stocks on Wall Street trade with minor gains as investors look beyond West Asia war-related uncertainties. Meanwhile, weekly U.S. jobless claims see a minor dip coming in at 215,000 as layoffs remain low. After yesterday's steep sell-off, benchmark staged a sharp recovery before giving up some of the gains, but eventually managed to close in the green. Nifty closes about 80 points higher at 23,960 levels. Broader markets outperform. Finance Minister Nirmala Sitharaman says the next phase of India's GCC's growth will be more diverse. She adds setting up of 5,000 GCCs by 2030 is achievable target as more and more global companies are looking towards India. IMD issues a red alert for Delhi and adjoining areas after torrential rain triggered widespread waterlogging and traffic disruption. Kerala also remains under red alert as intense monsoon showers continue to batter the state. Welcome to Business at 9. I'm Shubhani Gharat. The earnings season is officially underway, with TCS becoming the first major company to report its Q3 FY27 results. The IT giant delivered numbers that were largely in line with expectations. Revenue rose 2.2% quarter on quarter to 72,275 crore, while net profit declined 2.7% sequentially to 13,349 crore. EBIT also fell to 3.1% with margins narrowing to 23.96%. My colleague Sajid joins us from the TCS office with a detailed breakdown of the numbers.
That's right. The numbers are pretty much in line. Just to take you through some of the numbers which we have received, the top line on a rupee term is up nearly 2.2% on a quarter-to-quarter basis. It was anticipated to be up nearly 1.9%. So it's pretty much in line, which is the top line which is coming in there. From an EBIT margin point of view, it was anticipated that EBIT margins would be impacted to the tune of roughly 3.78%, but EBIT for TCS has, is down just 3.1%. So there also, is pretty much in line, and the PAT, it was widely anticipated that it will be down nearly 3.2%, but the PAT numbers are down nearly 2.7%. So pretty much in line with what we are seeing there. There are a couple of things which is coming out. One is the AI annualized revenue, which is now gone up to nearly $2.6 billion. At the end of Q4, it was around $2.3 billion, which TCS has announced. So there is an increase, incremental increase in the annualized revenues for TCS, which is coming. Now that comes around roughly around 7.5% of the total top line for TCS there. But more than that, the total contract value comes at around $9.5 billion. The range was $9 to $11 billion, so they have come almost at the lower end of the range. But in Q4, there are a couple of mega orders, mega deals that came in, and that's why we saw a $12 billion kind of jump in TCV there. But if you look at revenues, annualized revenues, $2.6 billion, which is coming in. You have a revenue jump QOQ in CC terms of roughly around 0.4%, and the LTM attrition, which is now coming in at 13.6% for TCS. So, if I go back to what the CEO's first commentary, which is coming in, it says that we delivered a strong order book of nearly 9.5 billion, including a marquee AI-led transformation deal with SKF, while continuing to add clients across key revenue bands and scaling our AI business to a 2.6 billion annualized revenue rate. That's what we are seeing there. From CFO, the first quote which is coming in is that in Q1 we rolled out annual wage hikes, strengthened our partnership ecosystem, and targeted investment to enhance competitiveness. We remain focused on building, acquiring, and partnering for AI-led capabilities while maintaining disciplined execution, industry-leading profitability and return ratios. So EBITDA margin is down on a quarter-to-quarter basis. We saw around 25% odd there. It has fallen to 23% odd number, which is 23.96%. That's understandable because they took a wage hike in Q4, and the impact of that was supposed to be 150 to 200 basis point in Q1, and they have seen that impact coming into the EBITDA margin for TCS. So it's going to be interesting. The other thing which is coming in is that the numbers are pretty much all in line as we speak. From a top line point of view, the EBITDA decline that was expected, and the PAT. In fact, EBITDA decline was EBITDA margins are slightly better than expected. The impact expected was 150 to 200 basis point, but it's been much lower than that impact that we have seen as per our poll which we had done.
Now, speaking to ET now, Piyush Pandey of Cranium says TCS AI business is moving in the right direction, but the growth trajectory is still at an early stage. While AI revenues have posted mid-single-digit growth, he believes sustained growth of over 20% would be a stronger indicator of AI. Let's listen in.
Yeah, this is happening on a much lower base of around, say, 6 to 7% of the revenue. And we do expect this revenue to grow at around more than 25% per annum for the next, say, 5-7 quarters. But as the base picks up, like maybe over the next, say, FY28 onwards, we can see the overall growth improving. But as of now, I would say it's a good early indicator. But let's see how it pans out. But we do expect this AI revenue to grow at, say, more than 20% for the next few quarters on a year-on-year basis. Yeah.
Now, also speaking to ET now, Aditya Shah, who's the founder of Hercules Advisors, says BFSI continues to be TCS's biggest growth driver, with vertical delivering another strong performance this quarter. Let's listen in.
So again, there also steady numbers. BFSI has been a strong point for TCS and continues to remain so. AI-related, I just got the numbers for the AI-related growth, and that growth also continues to be really very good quarter on quarter. The AI revenue is up about 13.6%, which seems to be good. The TCV is at about $9.5 billion, which also seems to be fairly good.
Now, Darshita joins us to share the takeaways from TCS management briefing.
Right. TCS has reported an inline set of Q1 FY27 numbers. Looking at the headline numbers first, where the revenue came in at $7.62 billion, which remains flat sequentially. While in the rupee terms, the revenue stood at around 72,275 crore, which was up 2.2% QOQ. Now, looking at the EBIT margins, which came in at 23.96%, which was down 132 basis points sequentially due to the annual wage hike. And now looking towards the PAT, which was broadly in line with the expectations. Now, on the operational front, the company reported 0.4% of constant currency growth and a healthy total contract value, which is TCV, of $9.5 billion, indicating a strong deal pipeline. At the same time, the annualized AI revenue run rate increased to $2.6 billion, which was up 13.6% QOQ. And during the con call now, the management acknowledged that macro uncertainties continue, but remained optimistic as demand in the BFSI segment stays healthy and the client mining remains strong. Now, the company expects the demand to improve from Q2 FY27 onwards, while the discretionary spending on AI transformation and data monetization projects is gradually picking up. Now, looking towards the AI front, AI continued to be a key highlight, with management stating that the agentic AI has now moved towards the production stage and delivers a 10 to 15% productivity gains across the engagements. TCS has also announced strategic partnerships with Anthropic, Mistral AI, and ServiceNow, along with the $800 million mega deal with SKF, strengthening its AI-led transformational pipeline. So yes, overall, to sum it up, while the near-term revenue growth remained muted, strong deal wins, improving AI monetization, and a positive demand outlook from Q2 suggest that the growth recovery story remains intact.
Now, one of India's largest EMCs is heading to primary market to launch an IPO worth more than 11,000 crore via an offer for sale. Amundi and SBI are pairing, in fact, 10% of their stake in the IPO that will open next week. CEO Debashish Mishra and joint CEO DP Singh talk about growth outlook. Let's listen into the conversation.
When we looked at the data last year, the total number of KYCs done by the CAMS, our market share is around 15.4%, but one-third, 33% of the new KYCs came to SBI Mutual Fund only. So we are proud of being the market makers rather than market sharers alone. So that's the kind of number. The number of new customers with us have always been more than 1/5 of the country. We are the leaders in SAP business. We are having 4,000 crore book, and it's growing at a rate of around 10%. 10 to 12% in the last few years. I mean, last year it has been more or less static. But the biggest moat is that the what you call the trigger rate vis-a-vis the industry is very high. Industry is getting the registered, triggered as a percentage of the registered book is around 83-84%. In case of SBI Mutual Fund, it is 91-92%. So that is the biggest, because of the stickiness, because of the distribution mix which we have, and the kind of funds which we have sold through SIP route are something which people are putting money for long term.
Credit card penetration in India remains low despite improving asset quality. According to TransUnion CIBIL, only 5.2 crore Indians hold credit cards, representing just 25% of the country's credit active population. The report also highlights that first-time borrowers now account for only 8% of the new card issuances, down sharply from 26% a year ago as alternatives like UPI and personal loans gain traction. Akanksha gets us all the trends.
Right. Credit cards are no longer the only way Indians are borrowing. And this is as per the latest TransUnion CIBIL report, which says that credit cards are increasingly competing with small ticket personal loans and consumer durable loans. In fact, over the last decade, the number of credit card consumers has grown 3.6 times to 5.2 crore, while active credit cards have increased more than 5 times to 10.7 crore. Outstanding balances have also surged to 3.1 lakh crore, and the average outstanding balance per consumer has doubled to 65,000. Now, one of the biggest drivers of this growth is also Gen Z. The report says Gen Z is entering the credit ecosystem earlier and borrowing more actively than millennials did a decade ago. Gen Z new to credit card consumers have risen to 2.2 million compared with 1.3 million millennials 10 years ago. Now, what's more is half of all new credit card consumers are aged 30 years or below, while 46% come from semi-urban and rural markets. And that's not all. 59% of new credit card users already hold 2 or more credit products. 45% have less than 2 years of credit history, and 25% already have 3 or more active credit products. Now, this changing borrowing behavior is also reflecting in the broader credit market. The share of live credit cards in consumption-led credit products has fallen to 38% from 56% over the last decade. Similarly, the share of card balances has declined to 26% from 36%. On the other hand, if we see, the share of consumers holding other consumption loans has doubled to 32%, while the share of consumers relying only on credit cards has fallen to 33% from 50%. So credit cards are no longer the default choice as consumers increasingly turn to personal loans and other unsecured credit products.
Now, speaking on India's global capability center ecosystem, Finance Minister Nirmala Sitharaman said the government is focused on creating a policy environment that supports long-term investments and simplifies compliance, highlighting measures announced in the Union Budget 26-27. She said the new unified safe harbour regime and the increase in the safe harbour thresholds from 300 crore to 2,000 crore.
The government recognizes that India's next phase of GCC growth requires an enabling policy ecosystem that reduces friction, improves certainty, and supports long-term investments. The Union Budget of 26-27, we have announced several measures that directly strengthen India's attractiveness as a global capability destination. Unified safe harbour regime for IT and IT-enabled services, simplifying transfer pricing compliance for GCCs, which you referred to. Enhanced safe harbour threshold from 300 crore rupees to 2,000 crore rupees, bringing many more enterprises under a simplified compliance framework.
Now, on to an ET Now exclusive. A secretary-level interministerial committee reviewed the coal supply situation during the monsoon season to maintain adequate stock at the thermal power plant. My colleague Prakash joins in with more details on this.
Well, the peak hour power demand is expected to increase further, and therefore efforts are being made to ensure sufficient availability of power. Government sources suggest that the secretary-level interministerial committee has reviewed the current coal supply situation during monsoon season. In fact, steps are being taken to ensure sufficient availability of coal stock at thermal power plants. Sources suggest that representatives from the Coal Ministry, Ministry of Railways, CEA, NTPC, Coal India Limited, DVC and Grid India attended the meeting. It has been observed that the coal stock at domestic coal-based thermal power plants declined to 15 days of consumption. In fact, coal stock at domestic thermal power plants stood at 42.8 million ton at the end of June, whereas supply is clearly depleting. In fact, coal supply to thermal power plants stood at 2.34 million ton per day against consumption of 2.50 million ton during June. Therefore, government is making a strategy to ensure sufficient availability of coal stock at thermal power plants. It has been observed that 25 thermal power plants were in the critical category in terms of coal stock as of June 24. Coal stock at these plants ranged between 2.8 days and 6.5 days of consumption. Power plants of SJVN, state generation companies in Andhra Pradesh, Madhya Pradesh, Telangana are facing coal stock depletion. Domestic coal requirement is estimated at 222 million ton during Q2 of the current financial year, and therefore it requires 460 railway rigs on a daily basis to maintain a coal stock of 40 million ton during Q2 of the current financial year. And therefore, Coal India Limited made a presentation on its monsoon preparedness. The company has already prepared a strategy to ensure sufficient availability. Government is making all-out effort to ensure sufficient availability of coal at thermal power plants to meet domestic power demand.
Now, Dixon Tech and Vivo Mobile India will form a joint venture to make electronic devices, including smartphones. Sumita gets us more details on that.
Just learned from the company's filing is that the center has approved Vivo Mobile India's proposal to invest in a smartphone manufacturing unit. This is going to be in a joint venture with Dixon Technologies. And remember, this is under Press Note 3 norms. And that really allows the two companies to now move forward with a majority-owned contract manufacturing venture in India. And this also marks a significant step, a significant sort of movement in Vivo's manufacturing strategy in India. And of course, it is going to strengthen Dixon's position as one of the country's largest electronics contract manufacturers in the country. And of course, now that it also includes smartphone manufacturing, because a part of that, the production is going to be localized by Vivo as well. In fact, in the stock filing, Dixon has said that it has signed a joint venture agreement and shareholders agreement with Vivo Mobile India. This is essentially to incorporate a new company for manufacturing smartphones and quote-unquote other electronic devices on an OEM basis. And of course, remember, this comes in after government eased norms under Press Note 3. In fact, Press Note 3 norms that were eased, they mandated prior government approval for investments from countries that share land border with India, and that also includes China. So, of course, this is one of the key applications that has gotten eased, and of course, we've seen that has gotten approved. And of course, we've seen India's ties with China. They have improved only, and of course, both the countries have been engaged as far as issues related to land border is concerned or investments is concerned. And of course, under this particular agreement, Dixon is going to hold a 51% stake in the JV, while Vivo Mobile India is going to own the remaining 49%.
Thank you so much for those details. It is time for us to slip into a very short break. On that note, you don't go anywhere. We'll be right back.
Every business is like a piece of land. From the outside, it looks ordinary. The real truth lies beneath. Dig once, you uncover losses. Dig again, unexpected profit shines back. Sometimes it's the heavy chains of debt. Other times the break of fresh cash flow. But deep below, traps wait. And if you keep digging, you strike the jackpot. The real metrics, the real value. This is all about your company, where we dig deeper so you invest smarter.
Deep dive, the story behind the numbers. Markets move fast, too fast. One small change, one quiet signal, and everything shifts. Deep dive doesn't just keep up, it gets ahead. We track the signals before they become headlines. Deep dive, the story behind the numbers.
Some brands entertain us, some provoke us, some transform the way the world moves. We track the minds shaping these movements. From brands redefining markets to startups rewriting the rules, we uncover the stories and trends fueling the brand economy. Campaigns that go viral, products that change the game, ideas that spark culture. This is Brandverse, your window into the world that builds the brands.
The headline is only the start. The real story unfolds in the details. When noise takes over...
Welcome back. You're watching Business at 9. I'm Shibani Gharat. Now, U.S. indices have witnessed slight advances despite renewed U.S.-Iran tensions and a jump in the oil prices. The tech-heavy Nasdaq advanced 0.6%, while the S&P 500 was 0.3% higher. The Dow Jones Industrial Average traded around the flat line. Nasdaq Composite rose with semiconductor stocks outperforming. Now, the latest U.S. jobless claims data signals that the labor market remains resilient. Initial jobless claims came in at 215,000 for the week ending July 4th, below estimates of 217,000 and down from 228,000 in the same week last year. Continuing claims held steady at 1.814 million. Matching expectations. This can be linked to the fading of seasonal distortions seen in the late May and June, mainly around school holidays, when non-teaching staff in some U.S. states become eligible for unemployment benefits. The data reinforces expectations that U.S. labor market remains stable, with layoffs staying near historically low levels. Now, moving on, the U.S. Central Command has stated that they have completed an additional round of strikes against Iran to further degrade Iran's ability to attack ships in the Strait of Hormuz. U.S. forces struck approximately 90 Iranian military targets, including air defense system. Tehran responded by targeting Bahrain, Kuwait and Qatar in the crossfire. West Asia is once again on the edge after U.S. President Donald Trump said the ceasefire seems to be over. While addressing the media on board Air Force One, Trump claimed that Iran wants to make a deal. Now, moving on, let's go on. Right. Now, moving on, Meta has stepped up its AI ambitions with the launch of MuseSpark 1.1, an upgraded version of its flagship artificial intelligence model. The latest release brings enhanced coding performance, improving reasoning for complex tasks, and a developer API as the company looks to compete more aggressively with rivals like OpenAI, Google, and Anthropic. MuseSpark now powers Meta AI's thinking mode. ABD will actually roll out across companies' apps and AI-powered devices. And now it's time for our FIFA World Cup trivia of the day. Did you know that the longest unbeaten run in the FIFA World Cup history belongs to Italy? Between 1934 and 1938, the Azzurri remained unbeaten across two editions of the tournament, winning back-to-back World Cup titles and creating one of football's most remarkable records. And before we leave, don't miss Football and Fortune ET Now special on FIFA Football World Cup 2026 as the tournament builds towards its grand finale. We go beyond action on the pitch to decode the business of football, from billion-dollar revenues and sponsorships to global economic impact of the world's biggest sporting event. Catch Football and Fortune on July 17th at 9 p.m. only on ET Now. Well, with that's a wrap on this edition of Business at 9. Goodbye from me, Shibani Gharat, and the entire team of ET Now.